ஸோ இப்போ நம்ம டிஸ்கஸ் பண்றது டிசம்பர் 2024 மேனேஜ்மெண்ட் அக்கவுண்டிங் கொஸ்டின் பேப்பர். So section A, dash criteria or a set of standards for a company behavior used by socially conscious investors to screen potential investment. So we will be using ESG criteria. So this will be used for investors to screen potential investments. So this will be covered in your theory part itself. So then moving on to second question. SB Limited produces 10,000 units of product S and 15,000 units of product R at total cost of 2 lakhs. The total cost of the company is apportioned in two types of activities. So machine are related and labor are related in the ratio 3:2. The following information is also provided. So machine hours, we have product S 3000 hours and product R 2000 and labor hours 5000 and 3000 hours. So we need to calculate cost per unit of product S and R. So we need to calculate cost for both the products X and R. So here they have given total cost, that is 2 lakhs. We have total cost of 2 lakhs. So in this, uh, here machine hour related costs is, we can identify how we can identify this machine hour related and labor hour related. They have given 3:2. So based on this ratio, we can segregate machine hour and labor hour related. So out of 2 lakh, so my total cost is 2 lakhs. So in this, they have given machine hour and labor hour related is 3:2. So my machine related overheads will be 2 lakhs into 3 by 5. And my labor related overheads will be 2 lakhs into 2 by 5. So if I'm calculating that, so 2 lakhs into 3 by 5. So 1,20,000. So my machine related overhead will be 1,20,000. So my labor related cost will be 80,000. That is 2 lakhs minus 1,20,000. So 80,000 you can easily arrive, or else you can calculate using 2 lakhs into 2 by 5. So in either way you can calculate. So here I am using a simple technique, that is 2 lakhs minus 1.2 lakhs. So I will be getting 80,000. So now again I want to split it for S and R, right? Because I want to calculate for both the products. So what will be my cost of health? So that is total machine hours 3,000 and 2,000. So this 1,20,000 will be divided into 3,000 hours and 2,000 hours. That means total we have 5,000 hours. Right. So total will be here 5,000 hours and here it is 8,000 hours. So we can easily segregate this into per hour basis. So if I am segregating per hour, no, how much we will be getting? 1,20,000 divided by 5,000. So I will be getting 24 rupees per hour. So that means for S, I want to use 3,000 hours. So I will be utilizing 72,000 for yes. So that remaining out of 2 lakhs, I'm utilizing 70,000 for, sorry, out of 1,20,000, I utilized 72,000 for S. So that remaining 48,000 will be for R. So in this way, we can segregate. So here I am repeating the procedure. So first, they have given total cost, that is 2 lakhs. So here they have told the machine and labor ratio is 3:2. So for machine related overheads, it is 2 lakhs into 3 by 5. So we will be getting 1,20,000. So remaining will be for labor. That is 2 lakhs minus 1,20,000. So 80,000 will be for labor. So here for S, we are utilizing 3,000 and 2,000 hours. So total hours is 5,000. So for product S, 1,20,000 into 3,000 by 5,000. In this way also you can straight away calculate it. You can easily calculate. Either you can calculate per hour basis and you can convert into uh, total. So for S, we have 72,000. So remaining will be for R. So for R, it will be 1,20,000 minus 72,000. So 1,20,000 minus 72. Or else you can calculate in 1,20,000 into 2,000 by 5,000. This way also you can calculate. Either way you can calculate. This is machine related. Then labor related cost. So this is, we have calculated machine related cost. So now we are going to calculate labor related cost. So how we already calculated what is labor related cost. That is total labor related cost 80,000 and we have 5,000 and 3,000 hours. So 80,000 into 5,000 divided by 3,000. So I will be getting here I need to put total, sorry. So 50,000 here, so that remaining 30,000 will be coming here. That is 80,000 minus, so total labor cost is 80,000. After that, S contribution is 50,000. So that remaining will be for R. So 80 minus 50. So 30,000. So my total cost for product S is 1,22,000 and for product R is 78,000. So now in question, what they have asked for, they asked to calculate cost per unit of product S and R. So how many units we produce? 10,000 and 15,000. So number of units, 10,000 and 15,000. So cost per unit will be total cost divided by number of units. So that is 78 divided by 15. Here 1,20,000 divided by 10,000. So my cost per unit is 12.2 and 5.2. So here I'm getting answer for option C, 12.2 and 5.2. So this is the right answer. So which of the following is the main cost driver of customer order processing activity? So if I am relating to your customer order processing, so what you will consider order value? So order value will be the main cost driver. So let's move on to fourth question. Zimbra Limited sold 65,000 units of its product at 80 rupees per unit. PV ratio is 20%. If total fixed cost is 6,40,000, what is margin of safety? So margin of safety, we have the formula. What formula we have for calculating margin of safety? We can calculate using break even point, right? So break even point we required. So here, how we can calculate break even point? So break even point is fixed cost divided by PV ratio. So for calculating margin of safety, I required a break even point. That is, my margin of safety's formula is my total sales minus break even sales, right? So I need break even sales. So break even sales. So how we can calculate break even sales, my fixed cost divided by PV ratio. Or if another way here is I can easily calculate using units because anyways I require margin of safety in units. So here also I can easily calculate break even sales in units. So that means fixed cost divided by contribution per unit. You have to remember if we are multiplying with PV ratio, sorry, dividing with the PV ratio, we will be getting the answer in rupees. Always we will be getting the answer in rupees. If we want in units, always we should divide it by contribution per unit. So we need to remember this. So what is my contribution per unit? That is 80 rupees selling price they have given and 20 rupees is their PV ratio. So contribution will be 18 to 20 percentage. That means 16 rupees. So here my fixed cost is 6,40,000 divided by 16 rupees. So my break even will be 4,000 units. So my margin of safety in units. So my sales is 65,000 units, which is already given in question. So 65 they have already given. My break even is 4,000 units. Sorry, 40,000 here it will come. So 25,000 will be my margin of safety in units. So the correct answer is option B, 25,000 units. Then to obtain the break-even point in rupee sales value, total just now we discussed. So break-even point in sales value means total fixed cost should be divided by profit volume ratio. If you are dividing it by contribution, we will be getting break-even point in units. So option D will be the right answer. So moving on to sixth question. So Little's Limited operates in single shift. Standard production in 8 units per shift of 8 hours at 200 rupees per hour. Actual production is 5 units per shift. The company allows 1 hour for lunch break. Actual rate of labor hour is 210. Labor efficiency variance. So here they are asking for labor efficiency variance. So here we are comparing how efficiently they are performing. So that efficiency comes where we will be comparing that has. So the difference should be between standard hours and actual hours for production. So here in actual hours, we have 8 hours. You have to remember how many hours is utilized for production. So here we have 8 hours, but in 8 hours we have 1 hour lunch break. So here actual hours of production is only 8 minus 1. That means 7 hours will be your actual hours of production. So my standard hours is 8 hours. So how we will be calculating standard production is, sorry, 8 units per shift, right? So standard units of production is 8 units per shift. But here actual production is just 5 units per shift. So what I want to calculate, my formula for labor efficiency is standard hours of required for actual production. That is, how many hours is required to produce this 5 units that I want to calculate. Minus my actual hours of production into standard rate. So this is my formula. So here my actual hours of production is 7 rupees. Fine. Sorry, 7 hours. So my standard hours required for actual production, I want to calculate this 8 units per shift. It is 8 units for 8 hours. So I require one to produce 1 unit. I require 1 hour. That is 8 divided by 8. So for 5 units, I require 5 hours, right? But here I used 7 hours. So here, what? So here, how it will be varied? So 2 hours, right? So 2 hours is adverse. So already it isn't two adverse. So my standard rate per hour is 200 rupees. So it is mentioned in the question already. So 200 they have mentioned. So here 2 into 200, 400 will be in adverse. So already actual hours is exceeded the standard hours. So it will be adverse. So always you remember whenever we are comparing the variance for cost, standard will comes first. So 5 minus 7, so you will be getting automatically in negative variance. So it will be in adverse. So option D is the right answer. Then, which one of the following is not considered as a method of transfer pricing? For transfer pricing, which method is not considered? They have asked. So, negotiated transfer pricing, market price, everything will comes under transfer pricing method. So here, fix a cost. We never calculate transfer pricing based on we never fix a cost. So we will fix the transfer pricing based on variable cost, but we never fix based on fixed cost. So option C is the right answer. Let's move on to next question. What is the name given to a budget that has been prepared by re-evaluating activities and comparing the incremental cost of those activities with their incremental benefits? So, the budget which is prepared for re-evaluating using incremental cost and incremental benefits is zero-based budget. So the concept of zero-based budget itself is we are preparing from scratch. So we are analyzing what is the incremental benefits, what is the incremental cost there. So option C is the right answer. Let's move on to ninth question. Written down value of fixed assets of Vanguard Limited as on 31st March 2024, 22 lakh 50,000. So on 1/7/2024, the company sold an asset having WDV of 2,50,000 for 2,75,000. So here we have sold the machinery worth 2,50,000 for 2,70,000. So other income for the year is 2 lakh. So the ROI, they have asked ROI, that is return on investment. So what is the formula for return on investment? Operating income divided by operating assets. So ROA is equal to operating income divided by operating assets into 100. So here, what is my operating income? This sale of fixed assets won't part of operating income, right? So I have to exclude that. So my operating income, how much they have given? 2 lakh they have given. Fine. So this is they have mentioned as other income. So apart from this sale of income, sale of fixed assets, they have mentioned 2 lakh. So we should not include this again. So this profit on fixed asset is not included here. That is clear because they have mentioned other income for the year. So this is assumed to be the operating income. So operating income is 2 lakh and operating asset. So how much will be our asset? That is for 24-25. So 22 lakh 50,000 worth was the opening balance. That is on April 2024. So during the year we have sold 2 lakh 50,000, right? So 22 lakh 50,000 minus 2 lakh 50,000. That means we will be having an asset value of 20 lakhs at the end of 31st March 25. So 2 lakhs divided by 20 lakhs into 100. So we will be getting a return of 10 percentage. So option D will be the right answer. Which of the following is the formula for calculating residual income? So residual income, how we will be calculating residual income? So residual income is calculated based on your divisional profit, yes, minus percent capital charge into divisional investment. So option C is the right answer. So we will be always calculating on divisional investment. So option C is the right answer. The theory of learning curve will only hold if which of the following conditions apply. So, learning curve depends upon repeating activity, and this should be in earlier stage. So there should be some development. These are all the key assumptions, right? So inconsistency is not an assumption here. If the workforce is inconsistency, learning curve will not be there at all. So option A and B will be the right answer. So Xeon Limited is currently manufacturing a component of a finished product which is readily available at market at 25 rupees per unit. In-house manufacturing cost per unit comprises of direct material of 10 rupees and other overheads 15 rupees, of which 60% is fixed. If the company decides to buy the component from open market, so as of now we are what we have readily available market, that is 25. So in-house manufacturing cost is 10 and 15. Out of 15, 60% is fixed, they have told. So if the company decides to buy the component from open market, so instead of manufacturing in-house, if in case if I'm not producing the component and I'm buying the component from outside, the machine can be used to manufacture another component fetching a contribution of 12 rupees. So that machinery will be used for 12 rupees per unit, they have mentioned. So what will be the relevant cost per unit of manufacturing product in-house, they have asked. So what will be the relevant cost? So if I'm using the machinery for manufacturing one product, right? Uh, So what will happen if I'm not using for the product? I will be using that product for another manufacturing. So I will be getting a benefit of 12 rupees. So here cost to be incurred is how much I'm incurring a cost, 10 rupees I'm incurring a cost, and other overrates, that is 15. Out of 15 percentage, 15 rupees, 60 percentage is fixed. So 15 into 60 percentage, that means 9 rupees. 9 rupees is fixed. So my fixed overhead is 9 rupees. So my variable overhead is 6 rupees. So here my fixed overhead is committed cost. So we should not consider this for my decision making purpose. So here what and all I need to consider, I will be spending 10 rupees as material cost. So this 10 I want to spend. So out of this 15, my variable cost will be, so 15 into 40 percentage, or you can reduce it. So that means how much we calculated? 6 rupees, right? 15 into 40% is 6 rupees. This one. And I am sacrificing 12 rupees contribution. That is called opportunity cost. So this is called my opportunity cost. So I need to consider this as well. So 10 plus 6 plus 12. So totally 28 rupees it will come. So my relevant cost per unit of manufacturing is 28 rupees. Hope this is clear for you. So whenever we are considering relevant cost, we need to consider opportunity cost, and fixed cost we should ignore, because if I am producing this component, I'm going to incur 9. Even if I'm not producing this component, I'm going to incur 9 rupees as fixed cost. So I am ignoring the fixed cost component. So here I'm considering direct material cost. So direct material cost, variable cost plus opportunity cost. So this will comes to my relevant cost per unit. Then move on to 13th question. Nikita Limited purchases raw materials at 35.4, inclusive of GST at 18%. So this is inclusive of GST. The company is eligible for input tax credit of GST paid. Machine hour rate is, so we are eligible for input tax credit. So machine hour rate, is 576. The product is manufactured in a specialized dice having facility to manufacture two products at a time. So we can manufacture two products at a time. The company cycle time, sorry, per shot is 25 seconds. So they have given 25 seconds as cycle time per shot. So cost of producing per unit, they have asked cost of producing one unit. Here, this GST part, I can claim it as income tax credit. So there is no need to include this in cost. So 35.4 is inclusive of income tax credit, right? So this part of 118 percentage. So what will be for 100 percentage? That is my question here. So 35.4 divided by 118 percentage. So my raw material cost is 30 rupees, which is exclusive of GST. This is my raw material. Okay, fine. Now, machine hour rate per unit, they have given machine hour rate is 576. Okay, I need to calculate machine hour unit per machine hour rate per unit I need to calculate. So here the trick is, here I am producing 25 shots per second. So the cycle time per shot is 25 seconds they have mentioned. So out of for an 1 hour we have 3600 seconds, right? So 576 divided by 3600 into 25, that is for 25 seconds. I'm 576 as hour rate. So this hour rate should be converted into per unit rate. So I'm dividing into 3600. It is for 1 hour, I'm having 3600 seconds. So this needs to be converted for 25 seconds. Again, this I will be getting for 2 units, because 2 units at a stretch I can produce, right? So I need to convert it again by dividing it to, so 576 divided by 3600 into 25 divided by 2. So my cost of producing one product will be 2 rupees. So 30 raw material cost, my machinery cost will be 2. So 32 rupees per unit. So hope you understood. For 1 hour, we have 3600 seconds. So I'm dividing it by 3600 seconds. That means 576 divided by 3600. I will be getting per second how much my machine hour machine rate per second I will be getting. So for one unit producing, I need 25 seconds. That is, in 25 seconds, I can produce two shots. So 25 divided by 2, I am using. Or else you can calculate the same thing by calculating number of units produced per hour. So how you will be calculating? So 3600 divided by 25 into 2. So you will be getting 3600 divided by 25 into 2. So 288 units you will be getting. So 576 is for 288 units. So 576 divided by 288. This will comes to 2 rupees again. So 576 is for 288 units, right? So 2 rupees per unit. So total cost will be 32 rupees. According to DuPont model, the main functional parameters that drive return on equity. So return on equity is driven based on operating performance, obviously asset usage performance, financial leverage. So all of this, all this financial functional parameters is required for DuPont model. So which of the following is not true? Margin cost is a system of costing. Key factor is important in ascertaining the profitability. So, margin cost is a technique of costing. It is not a system. So, option A is the right answer.